This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, January the 3rd at 8:08 Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Get the companion to the podcast, our free weekly newsletter. Happy New Year. Happy 2019. I think it's going to be, as we start off the year, very tumultuous in the financial markets. US dollar this morning at 96.53, Canadian dollar 73.92, the euro at 1.13, the pound at 1.25, gold at 12.88.40, silver 15.63. Gold silver ratio is 83, down from 86. Platinum 7.92, palladium 12.49, about $40 off of gold. WTI 47.25, Brent 56.01. Nat gas has come down substantially. It's at 2.93. Bitcoin in US dollars 38.44.25. Bitcoin Canadian 51.99.27. The Dow, as we start the day, is at 23,006. S&P 2,510. Nasdaq 6,583. TSX 14,347. The partial U.S. government shutdown continues. We're at about day 12. Also, the Democrats are taking over the House today. The Republicans will still have the Senate and the presidency, but there is a real gridlock. Trump wants his wall, and the Democrats don't want to give him the money. You have a partial government shutdown, and that will hurt the economy of the United States. Also, coming out yesterday, late, we had, for the second time in just over 2 months, Apple has disappointed its investors, this time with an announcement that tells us as much about the state of China's economy as the health of the world economy. Apple shares are down almost 8% in pre-market trading after the company cut its first quarter revenue forecast, with most of the blame being pinned on a slowdown in the world's second largest economy. Tim Cook said, the CEO of Apple, "We did not foresee the magnitude of the economic deceleration, particularly in Greater China." They said that in a release yesterday. I think one of the other things too, the price of some of their products have gone up very strong, up 10, 15, 20%, the new products that they've come out with. And they're getting to a point where they're pricing themselves out of the market when you compare them to other companies. And I think that has played a factor in it as well. If you have an iPhone and maybe you've upgraded every 2 years, now you may say, well, if the price is going up to $1,500 for an iPhone, maybe I'll wait 3, 4, 5 years. And that, I think, really has hurt them as well. Harold, it's an interesting time in the United States with the partial U.S. government shutdown. Trump and the Democrats are going head to head. Will Trump cave on the wall? We will have to wait and see.
I would bet that he will not cave. So the issue is that the longer this goes on, the worse and worse it gets. I had to contact the government office yesterday and could not get through to them. They were closed down, and that was the IRS actually. So that's a really horrible situation, because it's not only bad for the U.S. economy, but it's embarrassing for the U.S. government, to be shut down at this particular point. So that's adding a lot of negativity to the market. Then last night or yesterday, after the market closed at 4 o'clock, we saw Apple prices plummet, and that caused the market to go from positive to down at one time 400 points down last night. So Apple is the second largest company in the United States, or biggest company in the United States, and it's in big trouble. It's dropped over 30%, and you're 100% right, Randy. The fact is that there's not enough changes in these iPhones to make people want to go out and spend $1,200 to $1,500 every 2 years. If they're not going to change, and things are tough in the States, you're going to find that people just aren't going to buy them. So the fact is that don't think that this market with Apple is just going to drop a little bit further than skyrocket back and make new highs. There's no reason for that. There's nothing bullish coming out in that marketplace at this point that would make Apple go up at this time. So I know everybody had Apple in their portfolio. It was the most popular stock. Everybody was talking about Apple for the last umpteen years, and now look what happened. It's down 30% and could drop a bit further. The government shutdown is a real problem because you've got a lot of government workers that are out of work And then you've got government workers that still have to work but are not getting paid for it. So now they're suing the U.S. government. Gold has made a nice rally. Gold is just under $1,300. So even though the U.S. dollar is strong and up today substantially, gold is also up. And it's very unusual that gold and the U.S. dollar will rally at the same time. But we're up substantially, I think about 60 points in the U.S. dollar, and gold's up above $4. Now, the closer we get to 1,300, you will see the market pull back slightly and slow down a bit. It's not that 1,300 is the major market price. We all know what that major market price is. We have to break 1,380. But to get above 1,300 is a big coup for gold. Silver has actually made the bigger move this week. Silver is up to over $15. It's been sitting in the $14 range for a long, long time. So we are starting to get some action back into the metals. Again, in order for me to become bullish on gold again, certain things would have to happen. Number one, the U.S. dollar would have to come down, not go up, because any major rally in the U.S. dollar will stop a rally in gold eventually. But we have seen in the past, and it was in 1980, that gold and interest rates went up at the same time. That was a phenomenon back in 79 and 80. And if you remember, by 1982, interest rates were all the way up to 22%. At that point, gold had backed off substantially, but we believe that a lot of the move came from just massive sell-offs in the market and the fact that they actually closed down the market in gold and silver for a period of about 4 or 5 days before they reopened it again. Then the market just absolutely plummeted and fell out of bed, and the U.S. dollar got stronger and stronger, and that's where the relationship between gold and the dollar really shone through. So at this point, there seems to be an oversupply in oil. Oil's in the $40 range. Gold market's approaching 1,300. Silver's trading, just below $16, which is a good price for gold at this silver. It's made a nice strong move. So we are getting some action in the commodity markets, but the stock market looks abysmal, and the stock market could be in severe trouble because the problems with China, I think, have got to get worse. I mean, the fact that China has problems with the U.S. in this trade war, there's a lot of U.S. companies that are now having issues with China because all of their business is done through China. Apple, I would imagine, is a prime example of that because they get most of their product made in China, and we have issues with China right now. So I don't see this as a good situation. I don't think the beginning of 2019 is going to be a strong year for the stock market. In fact, I think it's the opposite. I think we're going to see heavy sell-offs, but we could see some commodities get some action, and gold and silver could be two of them. So we'll certainly continue to monitor and let you know. But as far as I'm concerned, in order for us to get serious about gold, it's got to close 2 days in a row above 1,380. And if that does happen, that would mean that the dollar could be coming down at that point, which is a strong possibility. The fact is that the U.S. dollar could definitely weaken if this government shutdown lasts much longer, if we continue to have problems with China, and if the stock market continues to do poorly. We could see a big sell-off in the U.S. dollar, which could push gold over that 1,380 level. And again, that could start a whole new bull market. Don't forget, the last bull market in gold started in 2000 at $250. This next bull market, when it does start, really has to start at 1,380. So we're talking about $1,000, $1,100 difference in the price of gold, which means that the next bull market in gold, when that does actually happen, could go to $3,000, $4,000, $5,000 if the situation is severe enough. So we're almost at 2,000 in 2011 till the exchanges did what they did. Otherwise, we'd be looking at a totally different situation in gold than we are at this time.
Let's get an update on what happened in 2018. Chart of the week in our free weekly newsletter. U.S. stocks log worst year since 2008. 2018 marks the first time since 1978 that the Dow finished out the year in the red after rising in the first three quarters, and the first for the S&P 500 since 1948. For the Nasdaq, it's only the second time in its history it failed to defend January to September gains through the end of the year, the last being 1987. We remember that as the year of the crash. This according to the Dow Jones Market Data Group. To give you an idea, Nasdaq for the year down 4%, Dow Jones down 6%, S&P 500 down 6%, and the TSX here in Canada down 12%. Harold, it was not a great year for stocks in 2018. They started out strong, and Donald Trump, the President of the United States, was really pounding the table. Hey, look what I'm doing. And at the end, it turned out to be a very painful year.
You bet. And again, it really changes the tone of everything, especially of his presidency, because if that's what he was touting as his main event type of thing, I mean, lowering taxes, income tax certainly helped the market at that particular point. He was beating his chest, he was bragging and all that type of thing, but he's not bragging now. He's blaming it on, obviously, other people. He's blaming it on the Fed and blaming it on China and blaming it on everybody else. But the fact is that to be at 26,000 at what time in the Dow and finish the year off at around 22,000, not that that's a horrible sell-off, but it certainly isn't indicative of a bull market. So the fact is that you've got major retailers going out of business. You have the major stocks in this country, Amazon and Apple, both down about 30% from their highs. That's a concern. But the biggest concern to me is what is going to turn this market around. You know, there's a plunge protection team that gets into the market when the market starts to get like it is at this time. When the market starts to sell off, as ridiculous as this may sound, there is a plunge protection team that will slow down the decline of the market. Now, is that a fair thing to do? In my opinion, absolutely not. To me, it's a rigged game. You know, if the market sells off, we're going to stop it from selling off. But if the market goes up, we'll continue to doubt the market. Now, the fact is that this market is so volatile. To have your money sitting in the Dow, and that's your retirement money, I mean, I would be very concerned about that if I was you. When a market goes, you know, down 2,000 or 3,000 points, then comes up 1,000 points in a day, and then doesn't follow through the next day and finishes negative, and now falls off again, that's not a good scenario for the marketplace. It means it's more of a gambling casino. It's not a place that you can really rely on in order to put your retirement funds. So people are really starting to realize that. And now at this particular time, and realizing and remembering what happened in 2008, 9, and 10, you know, the fact is that people should be getting gun shy. They should be lightening up on positions or sitting on the sidelines. Now, that's easier said than done. To sell out of your entire stock portfolio, you're going to have tax consequences from that. On top of that, you know, some of them can be short-term capital gains, some could be long-term capital gains, and some could end up hurting you. So the fact is that these markets, when they get the way they are right now, are markets that most people should not be in. They're way too speculative, way too volatile, and again, there is no news in the marketplace at this particular point that is going to move the market higher. You're going to get the market, you know, down for a couple days, and it may drop another 1,000, 1,500 points, and then they'll rally it up because they think the price is getting cheap and there's some undervalued stocks. But the bottom line is that the stock market's in big trouble right now, and I don't see anything in the horizon that's going to change that. So if that's what you're thinking also, you should really look at lightening up on your position, because there are prognosticators out there that believe that the Dow could drop below 15,000. So if that's going to end up hurting you, which it has to unless you're short the market or hedging it, I would not be in the market at this particular point.
Donald Trump came out and said there was a stock market glitch in December, but it will rise when trade deals are fixed. You would think there'd be a priority on that. The S&P 500 dropped more than 9% last month to notch its worst December performance since 1931. Investors are bailing out of mutual funds as if it were 2008. Mutual funds suffered redemptions of $56.2 billion in the week ending December 19. Also, hedge fund all-star David Einhorn posted his worst year ever, losing 34% in 2018. Remember, these guys are supposed to be the smartest investors. Greenlight Capital's main fund lost 9% in December, bringing its decline for 2018 to 34%. Cannabis short sellers made $432 million in December as stock prices tumbled in that sector. The Canadian Centre for Policy Alternatives is out with its annual reminder of wage disparity, saying the country's top CEOs will earn the average Canadian salary by 11:30 yesterday, Wednesday. A new poll indicates paying down debt is the top financial priority for Canadians heading into the new year. It's the 9th straight year CIBC's poll has shown Canadians are putting their balance sheets at the top of their to-do list. Amazingly, just 6% of respondents say saving for retirement is their top priority, and out of the 29% of respondents who say they took on more debt in 2018, 34% say they did so to cover day-to-day bills. And Harold, that says to me there are a lot of people out there living paycheck to paycheck. As we've talked about before, in the United States and Canada, there are people that don't have $500 or $1,000 for an emergency. If something went wrong, they would be in deep trouble.
You better believe it. These are not the greatest of times, and going into the new year, it doesn't have a positive feel in the markets at this point. Now, again, we tend to trade more the hard asset markets. So a lot of the assets that we have purchased and hold as assets are not volatile. Diamonds are not volatile. Diamonds don't trade like Apple did last night or anything like that. So, the fact is that we've always been more on the conservative side. However, there are situations right now that are extremely concerning, and I just don't want the listeners out there to get trapped in the situation and think just because the market may come down a couple thousand points that it's a buy. You've got to look at what is it that will raise the market. Now, if Trump is saying that once he closes some trade deals, everything's going to be okay, it will push the market back up. But the fact is that if the government is still out of business, there's still inflation. There's still a huge debt of 20 some odd trillion dollars that has not been addressed. There's still so many situations out there that can continue to hurt the economy. It's not just one thing. And his reason for being president is not for the stock market to go up, because most Americans are not in the stock market. They just can't afford to be. His job is to level the playing field and give everybody an opportunity to live a decent life, not just the wealthy. So, again, I just don't see a lot in the horizon at this point that's going to raise that market unless he all of a sudden lets China off the hook and gets rid of those trade tariffs, which he would be an idiot to do, because the fact is that he's committed to it, just like he's committed to the wall. And if all of a sudden he was to back off the wall, I think that he would lose the next election. So he's in a really tough position right now because everything is going against him. He has fired more people on his staff than any president in history. Nobody can work with this guy. So, again, I'm very, very concerned for the U.S. moving forward, especially for the short term. And again, I think that this first quarter of the new year is going to be difficult.
Here in Canada, politics could get very interesting. And I think in Alberta, we have an election coming up this spring that would be very, very nasty between all the different parties. And then in the fall, we have a federal election. So it's a year of elections in Canada, and the parties, I think it's going to get really, really nasty. In the United States, federal debt up to $1.37 trillion since last December 25th, and that is 2017, 10,000 $1,743 per household. The federal debt in the United States is close to $22 trillion, $21.8 trillion. The U.S. interest payments are about to skyrocket. In fact, those payments are projected to triple to more than $600 billion because of interest rates going up by 2023. The figure approaches the amount the U.S. spends on national defense, dwarfs what it spends on agriculture, Medicare, income security, veterans programs, just to name a few. Rarely have deficits risen when the economy is booming. That is something that we're seeing. They have huge debt and deficit problems in the United States. Now, here in Canada, we shouldn't be thinking that we're any better. There was a story that came out around the holidays. Federal budget in Canada won't be balanced until 2040. When the Trudeau government got into power 4 years ago, they said they would balance the budget by 2019, 2020. Harold, it says to me that governments, they're doing what's easy in the short term and putting off the long-term pain to somebody else. And when that long-term pain comes, it will be very, very painful for people that are the grandkids and future children of Canada and the United States, because they're going to have one massive debt to pay off at some point. Canada will be approaching close to $1 trillion in debt. Canada, put it into perspective, we're population-wise about the same population as California. So that is not a good scenario for us. A lot of money being spent right now, and eventually there will come a day where it has to be paid off.
Oh, yeah. And let's add in the $6 billion that he wants for that wall. So, the fact is that it's like they're selling off everything to try to make things better at this particular point. And so you're right. The long term looks terrible because everything they're doing at this particular point seems to be short term. So I agree. I think that obviously when you have $20 trillion worth of debt and interest rates are going up, that's a massive problem. I don't think, and I know this for a fact, that there's not enough money coming in additional taxes to compensate for that huge payout. And now that people are actually losing money in the stock market, that really takes away a lot of money and in tax money, and it's going to put the U.S. into a really terrible bind. So I just don't see at this particular point any easy way out. And again, the spending isn't stopping. They're going to have to pay back all the workers from the government, and they're going to have to pay off the wall. So it's a nonstop situation. Then we know that Trump wants a fortune to rebuild the infrastructure of the United States. So again, we could be looking at some moves in the commodity market that could really do well for us. I'm not going to jump the gun and say, let's buy gold right this second, because it's not the right thing to do. If it doesn't break 1380, it's not going higher. So let's just wait and see that happens. Let's see if we get the two closes in a row. And that doesn't mean as soon as that happens that the market's going to take off and run and we'll never catch it. In actual fact, from experience, when that happens, we could see a slight pullback and then a major rally in the gold market. So I'll certainly let you know. Don't leverage it. Don't do anything like that. When it is time to buy gold again, you buy it physically and you just put it away. But I think that the next rally in gold, if it's what I think it could be, we could be looking at gold going from 1380 up to the $3,000, $4,000, $5,000 level if things get severe enough in the U.S., and they certainly have the means in which to do that.
Harold's website is rarecoloreddiamonds.com. Get the companion to the podcast, our free weekly newsletter. You'll see the stories that we're talking about. Harold will be happy to send it out to you free of charge. Best investments of 2018, diamonds, art, wine, and luxury cars have outperformed stocks and bonds this year. Who beat this market? Investors who like the finer things in life. Luxury assets, wine, art, classic cars, fancy colored diamonds have all outperformed stocks and bonds. People are looking for a place for their cash, and the security of holding something physical is appealing, according to Anthony Maxwell, director of Livex, the London-based wine exchange. They're looking outside securities, and gold isn't what it used to be. Investors who have put money into the art market at the beginning of the year saw an average gain of about 10.6% by the end of November, according to Art Market Research Art 100 Index, the closest thing the industry has to a benchmark. Wine did very, very well. Classic cars doing very well. Colored diamonds performed very well in this environment. Harold, I would say to you that we're in a situation where people need to think differently when it comes to investing, because the old way, stocks, bonds, real estate, they have been in a bull market for 10 years and are starting to get to a point where they're dying out due to old age. And people have to take a look at the hard asset market, because it looks like it's going to have a resurgency as the stock and bond markets pull back over time.
You bet. The thing is the stock market can be a short or a long-term trade. Most Americans are comfortable because that's all they really know. Cars and art and diamonds and wine, they're longer term investments, but they're not volatile. They don't drop like the markets do. They don't have the same loss potential. You can't leverage them. So the fact is that it fits into a portfolio much nicer, because the fact is that, for those that didn't see the aftermarket yesterday, they wake up in the morning, they get the Wall Street Journal, and all of a sudden on the front page, they find out that their Apple stock not only dropped 7% in the aftermarket last night, but is down 30% already in the last few months. That's what the stock market gives you. You'll never read about that with a classic car situation or with a diamond situation or with art, because in most cases, these are one of a kinds. They aren't leveraged. They aren't traded on exchanges, and you don't have people shorting diamonds or shorting cars. It just doesn't happen. So, every investment has its time and has its worth. We have broadcast over the years the returns that we've seen on certain diamonds, because that's what our interest is, and that's what our clients' interest is, and that's what we do. And we've seen huge returns on certain diamonds. And this year, or last year, 2018, was an amazing year for diamonds. We've seen, prices in diamonds hit that, the world has never ever seen before. The latest one, which was the Harry Winston pink, sold for, what was it, $50 million, Randy?
That's right.
So these prices are just off the charts, amazing. And again, there's no way that a wealthy investor is going to put up $50 million if he feels that there's a chance that he's going to lose that money. It's a longer term investment. It's currency devaluation protection, and it's an amazing asset to own. And that's what we've been bringing to our clients now for about 15 years.
I would really encourage people to get the articles that we have in our free weekly newsletter this week. We have the Wall Street Journal, The Best Investments of 2018, and in there it mentions Eden Rachmaninoff, who's the chairman of the Fancy Color Research Foundation in Tel Aviv, and he mentions in the story that there's almost no volatility in the prices of diamonds, and they're a great way to diversify your portfolio. That is in that story. We also have two other stories that I think are must reads. We really don't have the time to go through all of them here, but the biggest and priciest diamonds of 2018, we have a story on that. Also, from Marie Antoinette's pendant to a 102 carat diamond, 5 epic gems that sold in 2018. Christie's and Sotheby's, they made close to $1 billion with their sales in 2018. And a fascinating story, the curse of the Hope Diamond is older than you think. The Hope Diamond, some people believe there's a curse associated with it. Fascinating read. But Harold, the biggest and priciest diamonds of 2018, they did mention in the story, Harry Winston, that diamond, $50.4 million at Christie's Geneva, the fancy vivid pink diamond sold. There were so many great diamonds that sold in 2018. It's just astounding to go through the list, and we could be here for another hour, truthfully, but we don't have that time. I would encourage people to get those articles, in particular, the best investments of 2018. Diamonds, art, wine, luxury cars. We saw handbags do well. Watches were doing very, very well. A very good year for hard assets.
You better believe it. Very proud of that. Very happy with that. And, the fact is that when you are diversified, if your portfolio is under attack like it is now with stocks and that type of thing, to know that it's offset by other assets that are not volatile, that are doing well, at least lets you sleep at night. But, the fact is, if all your money is in the speculative markets, you're going to have a lot of problems because, again, the markets just don't look right at this time.
We're at the end of our podcast, and we want to get to a lighter note story here in a second, but it's very important to remember top stories in 2018. And the Associated Press voted the top story of 2018 is the mass shooting at Parkland High School in Florida. It was on Valentine's Day, an act of senseless hate by a gunman with a semi-automatic rifle who killed 14 students and 3 staff members at Marjorie Stoneman Douglas High School. And Harold, you know so much about it because you live blocks away from that school and your son Jonathan went there as well.
You bet. It was one of the saddest and most frightening experiences you could go to. My home was 2 blocks from the school, and it was just absolutely horrific what happened to these people. And it's daily. People talk about it on a daily basis. And still, when you drive by the school, there's still a lot of protection there. Some kids really rose up and spoke their mind and did a very good job and, may have a future in politics. Who knows from that? But again, it was a tough year because after the Parkland shootings, there was 40 other attempted school shootings in the United States, which is quite concerning. It may not just be a gun problem. It may be a problem with this young generation that just isn't thinking right. I remember with the gunman, who was a teenager, his brother came to the school 2 days later, and they charged him with trespassing and put him on a $500,000 bond, which was unusual for a trespassing charge. But the comment that he made was, and they had tapes of this, that he had called his brother while in prison and basically told him how proud he was of him and how popular he is and how everybody's talking about him. So was that the motivation for going into school that day and killing 17 people? It wasn't only the Parkland shootings, it was the Las Vegas shootings, and there were other horrible events that happened in 2018. The unfortunate thing is that I just don't think it's going to go away until they can address what the problem is with this younger generation, because it's them that's doing this. And what is their motivation? Is it, that they're social outcasts, and by doing so, they're going to become popular and people are going to talk about them? If that's your reason for killing 17 people, you're a very sick individual. So again, I don't think that this is something that's going to go away. I haven't seen anything done. When these things happen, for a week or 2 or maybe, 3 weeks, it's in the news every day. But then when it's not in the news anymore, it's sloughed under the rug and nobody really thinks about it anymore. But it's a real situation. Every time I see my best friend, his granddaughter, who I've known since she was born, was an amazing young lady. The shooter came to her room first. Fortunately, her room was locked. And after he shot up the rest of the school and she was able to leave her classroom, she had to step over her best girlfriend. These are things that children should never have to experience in their lifetime. But it's commonplace in the United States. These things happen, almost on a daily or weekly basis. After the Parkland shootings, there was 40 other attempted shootings in the United States at schools. It just makes absolutely no sense to me that that this is going on and we're losing our young children. So again, it was a tough year in many senses, but that to me was the worst thing that happened in 2018. These type of shootings, whether it was Las Vegas or whether it happened in the nightclub or whether it happened in Pittsburgh at the synagogue, or, there's so much hate in this world at this point and nothing seems to be done, to rectify the situation. It's still a very sad and solemn time here in Parkland, Florida, all because of that situation.
And our thoughts and prayers go out to those affected in Parkland and all the other shootings, all the other violence around the world. It is very, very sad. Now, on a little bit of a better note here, as we finish off the podcast, Harold and I, we love professional sports, love sports. There was a bettor who won $100,000 after placing a $5 bet on a 15-leg parlay. So he bet on 15 NFL games, and he did the point spread. He got all 15 games right. $5 paid $100,000. Congratulations to that man. There was also another story I read where there was a person who was waiting for Georgia to beat Texas in the Sugar Bowl, and he was going to win around $365,000. And there was a huge upset. Texas beat Georgia, the team that was heavily favored. He didn't end up getting the money. Betting it's a crazy thing. I try and stay away from it. I just want to enjoy the games. But what an amazing thing, Harold, to get 15 games right and to win $100,000 on a $5 ticket. Stunning.
Absolutely amazing. Congratulations to him. That's a tremendous feat. It's difficult enough to pick one game, let alone 15 in a row. However, I did read the story about that guy who bet Georgia over Texas. All he had to do, because if he would have won, as you said, about 300 and some odd thousand. If he didn't win, he wasn't winning anything. All he had to do was take $100,000 or 150 or whatever the amount that he wanted to win and bet it on the other team, and he would have walked away, winning at least half or guaranteeing himself a win. But he didn't do that. I'm like you, Randy. I don't gamble. Never was a gambler. Just love watching professional sports. It's Canadian hockey is doing well now. The Leafs are looking really good. The Raptors are doing very well. It's going to be a good season, and my Patriots are in the playoffs, so I'm very happy about that.
And I still maintain Tampa Bay looks very good in the NHL. There's no denying that. But I still maintain Toronto's going to win the Stanley Cup. So there you go, Harold. I'm sticking with my prediction.
I'm with you, Rand. I just want to wish everybody a very, very happy New Year. I hope 2019 fulfills all of your goals and dreams and wishes. We're going to work very hard to make certain that we do the best job possible for our listeners and clients. I just want to wish everybody a very happy New Year and a very profitable day.
Thank you very much, Harold. And I might add that we will be here throughout 2019 with the podcast, and it's going to be so important to get the newsletter, listen to the podcast, because I think what's coming, you can see it already, partial government shutdown. Who knows when that will end? The Democrats, they're saying right on the front of the Drudge Report this morning, Pelosi in control. Trump can expect different world. Won't rule out indictment, impeachment. So it could get really hairy in the United States. And then in Canada, we have two elections, one in Alberta, one in obviously Ottawa federally. So it's going to be a very interesting year. And with Apple sending off these warning signs early on in 2019, stock markets could take a real hit. So definitely stay tuned. Get our free weekly newsletter. It's more important than ever. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.